Hi, sir. Our speaker is joining us, so let us start. Can you guys hear me?
Hi, good evening. Yeah.
Good evening, sir.
Good evening.
Okay, I think a lot of us have joined already, so let's start. I would like to welcome our guest speaker for today, Mr. Praveen Sinha. Thank you, sir, for taking out time to speak with us today. In our audience, we have students from IIM Ahmedabad, Bangalore, Calcutta, and Lucknow joining us today. Before we begin the session, let me first introduce our speaker for today. So Mr. Praveen Sinha is the Managing Director of PinCap, an alternative lending platform focused on bridging the debt financing gap for MSMEs. He graduated from Delhi College of Engineering in 2001, did his MBA from IIM Calcutta in 2008, and today he's a serial entrepreneur with an experience of leading multiple businesses, including Aquabrim, Jabong, and Anasha Art. Prior to his entrepreneurial journey, he has worked at McKinsey & Co., Microsoft, and Maruti Suzuki across China, Southeast Asia, Africa, and India. After having built many successful products, he is here with us today to share his insights on how to identify and build valuable products. Over to you, sir.
Thank you. And I think weekend is not a great idea. You might have hangover, most of you, but still. So I think I'll have a monologue in terms of what I think about startup and product, the topic that has been shared with me. And however, I find it more insightful for the audience if it is more interactive. Now, I don't know the whole culture currently in practice because I was part of this MBA some 10 years back, in fact, more than that. At that time, if that's the case, you should still be there because that's what is required. But out of the whole audience, few of will be actually interested and keen to know certain aspect of startups. So it becomes more meaningful. Now, I don't know why the topic was on product ideas alone. It could be more broad, but if it is on product, I'm assuming it's a tech product. But I will try to step back and say that products can be beyond pure technical, and there are founders and entrepreneurs who are doing it. So don't push that aspect away. It is not as hot topic for investors, but still, if you can crack the code, then it's at another league. And some of the examples were on generally you have and even SpaceX is not a software product. And in India, I find a lot of such opportunities. One of them, Aquabrim, was a pure hardware product company. And I'm not able to give a lot of time to that startup, but I think there is a huge space where a lot of such product innovation can happen. Software product, absolutely, there are huge opportunities. Am I audible because I'm getting that issue?
Sir, I think your voice is breaking a bit for most of us.
Let me switch to another network.
Yes, sir.
So I was
Recording in progress.
talking about product, and so we should not leave hardware aspect, though it becomes it makes your idea more complex to execute. Now, the first point is on what product idea will you work on and what are the identifiers and link where you can convince yourself that this is the idea that I want to work on. I think the first principle that you need to apply is in terms of the delta of what kind of convenience or what kind of a problem that it is eliminating. So if it is a problem that is huge for me, then the chances of success is very high. But if it is just an incremental convenience, then it does not flow that easy. So that's one way to look at it. And the second way to look at it is that there is no problem, there is no inconvenience, but there is an opportunity. And that opportunity cannot be analytical assessment. So for example, if you see ByteDance, gaming, TikTok, a lot of such products coming from the background that most of you are analytically well educated, can't connect and relate. How can someone waste time in terms of making videos for oneself? But that's where most of the population is. So I think you need to go beyond to what kind of mindset you are in. And to share you an example, when I was going to start Jabong, I was one of the few skeptical person in terms of will I shop fashion online? I would have not bought it. But I applied that frame because what you think might not be the what the market thinks and market is ready for. And to take a quick insight, which one is, if you watch TV, generally in IIMs, you generally have video, not TV or Netflix. कोई download कर देगा वही सब देखते रहेंगे. So, but in TV series, the most popular was, I think, Roadies, Splitsvilla, and whenever I used to sit and watch, it was interesting, but I always thought I can utilize my time somewhere else. However, that was the most popular series in the country at that time. So what you might analyze might not be where the market is. So as an investor, you would have rejected both the idea and that TV series as well. However, that is what the market needs. So what I'm trying to say is your idea might not be solving any problem. It might be entertaining others. And that's a huge way. It opens up a new market altogether. And then indirect data is utilized. And these concepts are very difficult to comprehend. Even cryptocurrency, I know within this 2030 group, someone will be super convinced that crypto is the way forward and someone will be totally, there is no basis. So I generally have a balanced view. And the way I look at it is that it has no value today, underlying value today. But as soon as the market accepts it as a form of currency, it is undervalued today. So it is based on market acceptance. If everyone accepts it as a currency, you sign a paper and everyone starts respecting. That's how Maha Gurus are born. So it's a good model in itself. So if people start trusting my signature, I become a currency myself. So I think once the trust on that cryptocurrency established as an exchange, there is a huge value. But if someone asks me what is the underlying value, there is no underlying value. It has a great technology. It cannot be. It is not susceptible to fraud. Let's put it that way. However, it does not give its value unless there is a market acceptance. So, three parts I divided. One was inconvenience. What inconvenience you are trying to solve. Second is a big pain area that you are trying to solve. Third is I don't know, but it can be created which someone will use, engage, spend time. So these are the few ways to look at it. Now, delta is more towards how fast it catches up. So how intuitive it is to use so that you don't have someone to explain how to use it, or it is so engaging that person spends his or her own time to explore more about it. So that's the second phase where you need to think. Now on the idea itself, see, now many of the product ideas are in the B2B space. B2B space is easier to monetize, and B2C is very difficult to monetize. But B2C has a huge growth in terms of number of users, data that it can create. However, B2B can give you revenue faster and will have a lower bleed. And you have a use case which is very well explained because it's more or less standardized across the solution or the vertical that you are trying to solve for. Now, these two aspects, once you have addressed, I think what becomes more important is your founding team. I have rarely seen a product company without a strong tech guy. Because you cannot, I won't say you cannot, it's difficult to delegate and build something which is core technical without a technical founder. It's not that it is not possible. So either there should be someone who is highly technically but well convinced of the idea, even if he's not a founder, because the main implementation or the heart of your company will be that. A product guy is very important. If a product guy can be a visionary, but product assessment, especially in the B2B space, is more analytical. Any one of a smart, curious and process-oriented guy or a person, even a consulting firm can do it. But a strong code, even if you outsource, either will require huge budget or will not be able to get you the right solutions. Now, there is another trend that is coming. I'm just trying to flicker in one area where I have seen why highly technical people are not able to become founders. And the reason is the gap between the functional knowledge and the technical knowledge. So let's say, I think most of you would be aware of quantitative trading, algorithmic trading, but then the functional knowledge of that vertical, how the share market operates, and a strong coder is a rare combination. So generally what happens, there is a product manager who understands it, and then there is a technical guy who implements it. But there is always a communication gap. There is a loss in what is being trying, the product guy is trying to interpret, or technical guy is trying to comprehend from what he's being told. So how do you marry those functional knowledge with technical knowledge becomes very important. And being a product guy with some understanding of coding as well, you can consider to implement. So founding team is very important, can be co-founders or employees with stock options, but that's the second level of design that you have to think. Many a times I am asked whether a single founder is good enough. Absolutely, it is good enough, but it's better to have more than one founder. Not a necessary condition, but it's always better. And the rationale should be more in terms of what kind of personality the founder has. If he is very control oriented, not very comfortable delegating, trusting, he always or she always needs to check whatever is happening, then single founder is good. If you're comfortable with delegation, then a complementary co-founder can be amazing. And especially during the initial days where the processes are not set, many things are not established. So it's like raising someone, it's like raising a child, or where two parents are always relevant. If someone is sick, or one plays one role and another plays another role, so the startup gets more parental time. So it's always good to have two, but not a necessary condition. And also depends on the profile of the person. So let's say a founder is very good in sales. He will get you clients, he will get you investors, but he's not very focused, operational, analytical, task oriented. then you need a complementary co-founder. So one is facing the market, second is facing the business execution and delivery. So it depends on the structure. You can hire someone also, but then if it's an employee, then it is driven by the founder. So if that founder is not very well organized, the organization will find it very difficult to have an organized way of working. So those are the elements that one needs to think. Now, funding and valuation. So valuation is a bit tricky nowadays. It has become like jewelry shopping. You might understand how much gold is used, but then the stones can come from anywhere and it can have any value. And then it might be the last piece and someone will pay more. So we don't know. Honestly, we don't know on what metrics the startups are valued. But I'll give you a sense in terms of how and why I think it is valued the way it is. And it's a tricky time, nothing right or wrong. One is investors are much more towards future rather than bottom line valuation, the way we do it. I think most of you would have read price by earning or future cash flow. But those numbers are currently very difficult to comprehend in terms of valuation and the profitability of the business. So I won't say that it will not happen. Probably it will happen in the future, but generally the tenure has already happened 10, 15 years of the startup phase, and still the profitability is not visible and the valuations are very high. So early stage, what I think is there is a thumb rule more than analysis, because you can do the reverse calculation of discounted cash flow. You'll say what value you want to give. I'll do the reverse calculation in terms of how much profit it will make in future, etc. But I think a thumb rule and the way that and why that thumb rule is there. So very early stage POC stage or early traction stage, 10 crores. Before that, it is valued at around 4 to 6 crores. So why is that? Because let's say 4 of you start a company. Now you need to raise 1 crore and your valuation is not even 4 or 5 crore, then you dilute 20% immediately. So you have not yet started and you have lost 20% of your equity. So if everything is on paper, you should not be valued more than what the book value is. Then why is it being valued more? Because of that rationale, and probably you will implement things very fast and the cash flow or the business will be established faster and you will have skin in the game. So technically, I'll say everything is on paper. I should not value more than 1 crore, not even 50 lakhs or 2 crore. And you raise 1 crore, you lose 40%. So broadly, that's the negotiation that happens. And you also say that by next year with this money, it will be highly valuable. So your worth of stock worth will be probably triple, double, etc. So that's how the stages work. And this stage keeps on working. And you'll see that most of the founders either get a stock buyback option, or you will find most of the unicorns currently in India, the founders will have single digit shareholding, even if towards the lower side. If you go back and see the success stories of when there was a lot of IT startups and companies were formed, founders had higher stakeholding. Even internationally, you will find it has slightly higher stockholding. And but the framework that operates in, it's like a bigger pie. So more size it becomes, even if the shareholding reduces, the value is there. But then the ownership and the control is not. So fundraising and valuation will go in terms of sequence. Either you start before even at the time of formation of the company, it's more like a pre-seed stage or seed stage or early stage. And then you have VC funding, pre-series A, series A, the kind of journey and the kind of losses or capital that is needed. Based on that, you decide on fundraising. And I think one of the most important aspect is always your customers, how you are targeting the customers, how are you acquiring the customers. If your user base increases, the current metric is more on growth. It is less on profitability and bottom line. Companies which can grow really fast are valued more. Bottom line, it is interpreted that there is, once there is a growth and consumers are using or finding it slightly divergent perspective, that it is not possible to do all the time. But yes, absolutely, I'm along with most of the investors when they say if there is a huge use case and consumers are tied to it, there will be monetization aspect which will be viable. And that has happened in a lot of free gaming apps or many other social websites. You'll find that those models have worked. So customer interaction, customer retention, customer acquisition, and growth in terms of your revenue or customer base becomes very important. And then overall, how you manage your team, how you manage the processes, because when you start early, it is less process, more people, you trust people, you delegate people, you enjoy the small team. But as you scale, it is not possible to have those kind of interaction. Let's say you have 1,000 people, you won't be able to interact with them every day. So processes are brought in. And that is the time when you will also find attrition, because many people who enjoy freedom, who are builders, creators generally find very difficult to be under discipline, or let me put it under process. So you'll see attrition of the early stage people during the stage when processes are implemented. So all this is part of the ecosystem, and it's a fun journey. Job is also good. I'm not saying, I have worked with McKinsey, Microsoft. It was exciting, but starting your own and running your own company will be a very, very delightful experience. It won't be always fun. It will have its ups and downs, but a lot of learning, a lot of degree of freedom and sense of satisfaction if things turn out the way you wanted. So I'm not saying this is the only way. Again, it should depend on what kind of person and what kind of personality you have. I have a lot of my friends who are very clear that startup is not for them, because they operate very well when they are set with a given domain, that this is the area of responsibility, this is what needs to be delivered. Not very comfortable with flux, uncertainty. Amazing and intelligent people. So, and they're contributing really well. So it depends on what you want and how you want to, live your life. This is a great option, I'm saying. I realized it quite early, not when I was born. I was not that lucky. When 10 years, when I was at 10, of age 10, I dreamt and I realized this is what I was born for. Or while I was walking, there was one guru who came and said, "Bachche idhar aao, tumhe to entrepreneur banna tha." So nothing like that happened. While living my life, I realized this is what I wanted to do. Quite late, in fact. And when I realized, I started my own. Now I will leave for Q&A, and we'll try to wrap it up in 5, 10, 15 minutes. How much time do we need?
Yes, sir. I think we had planned to 6:30, but if you're ready to take questions beyond that, we'll be available. I think Pradeep has a question, or you can go ahead.
Sir, thank you for the beautiful talk you did. Sir, I have one question. Like recently, what startup ecosystem is going on? Like the innovation factor is coming down, I feel. Nowadays, like we see a lot of startups with very similar things what people are doing currently, and still they are getting a good business, and still they are getting evaluated a lot. So, sir, how much importance you are giving, like you yourself personally give for the innovation in a startup, and like it should not be something which is already done. So, what is the importance of innovation? Is it something relevant till today? Now?
So I think it's not a recent observation. It has always been the way that a successful model being cloned and copied in India gets success. because it's tested, a lot of investors have seen it. So it's easier to raise money, the prototype is there, and nothing wrong with it. I think that makes huge sense, because let's say a good concept exists in developed countries or other countries. It has now been introduced to India or incorporated in India. So when Amazon was there, Flipkart came, Snapdeal came, even Ola, Uber. So you see all the segments, these are established successful models which have been replicated in India and quite successfully by Indian entrepreneurs. Then they face global competition as well. So I think one way to look at it, and it's an easier way to look at it, is that a successful model where India is ready, consumers are ready, why not implement it? Now, the second part, which might answer partially to your question, is innovation. Innovation, I think, is very, very important. But to get a really innovative product is very difficult. Even globally, you will find not many companies who have really innovated. I'm not saying there are not, but you'll always find masses will be more towards the existing business. If it is working in Delhi NCR, why not in Bangalore? If grocery is there, if fintech is there, the market is so huge that one player cannot capture, so 10 enters. They also enter because it's investors also know, and the ecosystem is being built. When the ecosystem is being built, a lot of companies come, then there is a consolidation. It happens across sector. Airlines, e-commerce, you'll see 20 of them coming and then 10 of them dying, and then again it stabilizes. It's a cyclical process, because at the time of building that ecosystem, such initiatives are required. Real innovation, personally, I find very, very interesting. And if I get a startup idea where there is real innovation, I would definitely go for it. But chances of or probability of getting a really innovative idea is much or far less than getting these ideas which are financially viable and already proven in other markets. So that's how I'll put it. And I will also suggest, don't keep waiting for a super innovation. It will be, you might get lucky, you might get an innovative idea tomorrow, but a small improvement, which we call Kaizen, is also good enough. If you keep an incremental 0.1%, 0.1% improvement in whatever you are doing, you can do the math, what percentage increase you will make. So, and 0.1% cannot be an innovation. 0.1% improvement is like an incremental improvement. What is the difference between Kaizen and innovation? Kaizen and innovation is when you add gears to your bicycle, your efficiency improves. That is Kaizen, probably. Or you keep you have realized that how the greasing, oiling, etc., keeping your bicycle always maintained, always gives you the better result at the right air pressure. What is innovation there? If that was the mode of commutation, adding an engine was the innovation. By doing everything, if I could drive 20 kilometers per hour, it became 25. But as soon as I added engine, it became 100 kilometers per hour. So Kaizen for me is a significant step change, significant step change. So if you can think of a significant step change, amazing. If not, let's keep improving. That also has a market opportunity. But if you come out with a disruptive or an innovative idea, chances are that you will get funding if it is a viable and a real innovation.
Yeah, thank you so much for your answer, sir.
Thank you, Kuldeep. Arvind, I think you can go next.
So thank you for the talk. How do you think about adopting evolving trends and gaining market acceptance for a new way of solving a problem? And like, do you have any mental models that you have in mind that I see this evolving, so I'm gonna use it in my solution? And like, how did you get the conviction for Jabong?
See, I have done multiple startups, and I won't say I have a mental model, but I do have a framework. And there is no one answer or one framework which fits all. So let's say Jabong was more analytical when I decided. It was more like it did not fully play out the way I had analyzed, but I was very sure that if one, the data was suggesting that internet penetration is right and interaction will happen. Ticketing was already there, IRCT was there. So we had enough data to showcase that this is how people move from content to digital products like ticketing, etc. Then they move to product electronics, then they move to fashion. This is how the journey happens. So from data perspective, market was ready. But from my own assumption perspective, people were not comfortable buying fashion, which I tested through doing a small research on my own. I took a AC chair car train and I sat and interacted with 60% of the co-passengers. Will they buy or shop online fashion? And they actually spent time with me, and I realized that they will shop. And so that was how I tested, and then I got convinced that this is work. So that's the second point, that once data suggested that this is what market is ready for, and my assumptions are validated, then I started. Now, what happens for any idea before you implement? It's very important to test the market, whether your consumers will accept or not. So there are two parts. Investors might think this will work, then also it dies down in few months or years. If the customers are supporting, chances of dying down is very less. And you have to think in another way as well. So there are two things. One, you take a segment and you see what are the challenges, you solve all the challenges together. Then it might be a super solution, but then it needs all the bandwidth and capital to solve for it. So you know your background, or whoever is starting the idea, you know that these are like 8 problems, I need to prioritize. So if once you are with restrictions or constraint of resources, then you should try to fit at one go to beat the market. So e-commerce was more of solving for supply chain problem. Market was there, brands were there. I was not making product. Product was for profitability. Creating our own private label is for profitability. Otherwise, all the brands are there, consumers are ready. So you just need to ensure that they trust the supply chain and the model of sale. So that was one problem. I could have figured out another area. There might be 3 problems. And in Aquabrim, which I did, I realized that if you don't have a lot of resources at an early stage, it is not advisable to solve all aspects of the problem. Then you will not be able to do justice. Customers will not be happy because your product does not give full solution. So that's, I think, a broad level where you can check.
Thank you, sir.
Thank you, Arvind. I think, sir, we are past 6:30 now. So if you would like to extend by 5 minutes, so we can probably send other questions over mail and
yeah. So let's do later. Yeah.
Yeah.
Okay.
Yes. Thank you, sir.
Thank you.
Just before we close down, sir, I think I'm sure all of us have had great insights to draw from today's conversation. And I would like to take this opportunity to thank you for interacting with the students and sharing the knowledge you have gained over the years. And I think you've inspired a lot of us to build the next generation of products that the world needs. Lastly, I would like to thank everyone who has joined us today. We at PM CoLAB will be back again with some interesting sessions in the future. Thank you so much.
Okay, thank you. Thank you, everyone.